Hello and welcome to another TLC Tutoring Company accounting lesson. Today we're going to be going over bank reconciliations as well as the journal entries that may be required for a bank reconciliation. So here we have an example. Off to the left is the bank reconciliation we are going to complete, and right here we have all of the information that we need in order to complete this reconciliation. So here we have the accountant for Swift Sweepers Incorporated. Notice that the company's records indicated that there was a balance of $22,000 in the cash account at the end of the day on July 31st, 2025. However, the July 31st, 2005 bank statement includes a balance of $19,340. So as you can see here, we already have a little bit of a discrepancy. According to the accountant's records, we should have $22,000 in the account. However, upon closer examination of the bank statement, we actually only have $19,340 in our actual checking account. So we have to figure out where this difference comes from. So for this company, Swift Sweepers Incorporated, we are going to be completing a bank reconciliation. And this is going to be completed at the end of the period. In this case, it's going to be the end of the month, which is typical for bank reconciliations. So on July 31st, 2025. Let's make that a little bit prettier. There we go. So let's take a look at the information that was provided. Now remember, with your bank reconciliation, you have two pieces. Up top, you have the balance for the bank along with any changes, and on the bottom, you have the balance for the book along with any changes that need to be made there. Now, let's start by just filling in the basics, which would be the balances. So according to the bank's records, which would be on your bank statement, the balance in the cash account or in their checking account is $19,340. However, according to our records, in our cash accounting records, we should have $22,000. So there's some money missing, so they're going to want to figure out what's going on. And keep in mind, it might not be that money's missing. It might be that our balance is actually something a lot lower. We just don't know about those changes. So now that we have our balances, let's take a look at the additional information. Here it says that there was a deposit for $5,000 that had not cleared the bank. So this is called a deposit in transit, and what this typically means is that we would have made a deposit probably at the end of the day on July 31st or over the weekend when they aren't open, and so the bank does not know about this deposit. However, we do. So when we received this check for $5,000 or this cash, whatever this deposit is, we would have increased the cash balance according to our records. However, the bank did not know about it, so they do not have that $5,000 in their records. So let's go ahead and account for that deposit in transit for $5,000. Now, our next one says that there is a non-sufficient funds check that was returned with the statement for $960. Now, non-sufficient funds checks are those checks that essentially have bounced. So someone gives you a check, you put it into the bank, and the bank says, oh, the person who gave you the check did not have enough money for this check to clear. So since this check has not cleared, they send it back to you and say, sorry, we can't put this money into your account because the person does not have sufficient funds. So let's think about what happened. When we originally received this $960 check, we would have increased our cash. Cash would have gone up. So now that they return it and say, actually, you don't have that cash, what do we have to do? We have to change our records by deducting that NSF check. So let's deduct NSF check for $960. Okay, so for this next one, we have a company receiving a check for $3,000, but when deposited, the bank recorded it as $300. This, as you can see here, it was supposed to increase our cash by $3,000, but the bank only increased it by $300. I actually want to come back to this one. This is called an error, and I want to take a look at that one at the very end. So D says checks outstanding totaled $3,500. So let's go ahead and talk about what checks outstanding are. So when we write a check, we obviously know that we have written this check, this payment. So we've updated our records. However, until that person that you provided the check to actually cashes the check or deposits the check, the bank does not know about it. There's no way for them to know that you have written that check. So therefore, your records are updated. However, the bank's records need to be updated at this point. So let's go ahead and deduct that check. Let's see. Let's call it outstanding checks. Those outstanding checks for the total amount that are outstanding, $3,500. Okay. Now for E, the bank collected $2,500 on a note, and that note included interest of $150. So essentially, the bank collected $2,500 on our behalf. This happens every once in a while. The bank will make regular collections, or someone makes a regular deposit into our account. So let's think about it. Who knows about it right away? Well, the bank collected it, so the bank statement is updated. So up here, everything on the bank side has been updated. However, we didn't know about it until we actually received that bank statement. So we have to record that collection of $2,500. So now our records are updated for that collection that we previously did not know about. Now for F, the company wrote a $500 check for rent expense but recorded it as $550. So here we have another error. So again, let's leave errors for the very end. And lastly on this list, the last one we need to take a look at is service charges for the month, or $50. So remember, service charges, who knows about it? Well, it's the bank that's probably charging you this. So the bank already knows about the service charge. However, you need to record that service charge. So how can we record this service charge of $50? By decreasing our cash balance on our side. Remember, this bank reconciliation, the entire focus is on cash. So we want to know exactly what is happening to our cash. So if they took out $50 from our account, then we have to recognize that there is a deduction in our cash account by that $50 service charge. Okay, now that we have all of those pieces of information, let's go back up to the errors. And before we get into errors really quickly, notice here deposits in transit, outstanding checks, collections, non-sufficient funds checks, and service charges. These are always and forevers. These are things that are always going to be treated this way. Whenever you see a deposit in transit, it will always be an add to bank. Whenever you see a non-sufficient funds check, this will always be a deduct from book. This is something that does not change. Errors, on the other hand, you have to analyze them to determine where they go. They can be an add or deduct on the bank side or an add or deduct on the book side, depending on what happened with the error. So you have to analyze them very carefully. So let's take a look at that first error that we saw in C. The company received a check for $3,000, but when deposited, the bank recorded it as $300. So let's think about what we did. When we received the check, we would have increased our cash by $3,000. However, the bank made a little bit of an error here. They only increased it by $300. So if they were supposed to increase it by $3,000, but only increased it by $300, what would we have to do on our bank rec to fix that? We'd have to add in that error. And remember, when you're putting in these details, pay attention to what your textbook and your instructor wants. In this case, I'm just putting the 300, 3,000 to know which one I'm talking about. However, your instructor might have a much more detailed description that they require. So looking at this check, let's think of some other ways that we can really analyze it. There's a few rules that we can use. One, who made the error? In this case, the bank recorded it for an incorrect amount, so the bank made the error. So that means it goes on the bank side of the statement. Two, we can easily figure out the amount of the adjustment that we need to make. Here, they were supposed to increase it by $3,000, but they only increased it by $300. So what is the difference? $2,700. So we know it goes on the bank side. We know it's $2,700. Now, whether or not it's an add or deduct, that's going to require you to really analyze the error and figure out what happened. So when we take a look at this error, Notice that they were supposed to increase it by $3,000. So sometimes it helps to do these little notes. Supposed to increase it by $3,000. However, they only increased it by $300. So what do they have to do to fix it? They have to add in an additional $2,700. So that's how we know that that one was an add. So that's going to help you get to where you need to be. Now, other methods of taking a look at this, some people put the error for 300, the end result that they want at the bottom, and then they figure out what changes need to be made. So let's try applying that to our next one. Here on on F, the company wrote a $500 check for rent expense but recorded it as $550. So let's go through those questions. Who made the error? The company made the error, so it's going to go on our book side. Our second question, what is the difference here? Well, the difference is $50. $550 minus $500, so it's $50. So we know it goes on the book side, and we know it's $50. So let's really analyze what happened now. Now what they did was they took out $550 from their account, but they should have only taken out $500. So if there was supposed to be decreased by $500, but they took out $550, they took out way too much, what do they have to do to get this to add up again? They have to add back in the error. So here, when we add this back in, what we are doing is we're saying, previously, we decreased our cash account by too much. Now I'm adding it back in to bring it back to the 500 that was supposed to originally be deducted. So these take a little bit of practice. Continue to analyze all of those different changes that occurred during the month, or outstanding or in transit items, and you'll be able to better really analyze these bank reconciliations. Now that we have everything actually in our bank reconciliation, we still have another step. We have to add everything up. So let's go ahead and total up all of those pieces. So we have 7,700, 19,340 plus 7,700, so that's 27,400. However, we did have a deduction. 27,040 minus 3,500 means that we have $23,540 as our adjusted balance for the bank side. So keep in mind what we did here. We took our 19,340, added these two together and summed those two up. Then we deducted out all of our deductions, and that gave our adjusted balance of $23,540. Now let's do the same thing for the book side. Our total additions were $2,500 plus $50, so that gives us a subtotal of $24,550. The total of our deductions was $960 plus $50, so now let's go ahead and deduct here, and we'll be able to figure out if everything balances. 24,550 minus 1,010, 23,540. Now, here is a great little tool to see if you made any errors. Notice that these two adjusted balances, they equal. That is a great indication that you have done everything correctly. Now keep in mind, it's not 100%. You can always force your way to make those adjusted balances work. However, it is a good indication that you're probably on the right track. So if they don't equal, you know to go back to your bank rec and take a further look, see if there's anything you missed. Okay, next video we are going to go over the journal entries that are required for a bank reconciliation, and we'll get into more detail on that in that next video so we don't kind of skip ahead of ourselves. So if you are required to do any journal entries for your bank rec, definitely move on to the next video, and otherwise this is all you really need for your actual bank reconciliation form. So continue studying. If you have any questions below, please feel free to let us know in the comment section, and in the meantime, happy studying.